Some stocks, they may or may not be hot right now, but LKP Finance does believe that at some point of time these stocks will become extremely valuable compared to what they are right now. Lots to chat about with S. Ranganathan, who is the head of research at LKP. He joins us after a while now, on a bit of a hiatus, so to say. Ranganathan, really good having you. Thanks so much for taking the time out. You know, we keep on talking about the mid-cap space and the kind of value that exists in certain stocks, potential multi-baggers, so on and so forth. I'm sure you identified a few. Let's start off with the first one. And I think Cummins is the first one that you're recommending. Why do you like this one?
Yeah, Neeraj, Cummins is a well-tracked stock, and we believe that it's the best bet to play the revival in the power and the industrial space. Simply because, you know, they are at the forefront of technology, and our interaction with the company and some of its peers like Kirloskar Oil Engine seem to suggest that the power situation in the country is not yet out of the woods, and it's not only the south but even the other regions are facing massive power shortages. So I think Cummins is our pick, and the valuations are unlikely to get any cheaper. It's a debt-free company, and we believe that Cummins is very unlikely to trade at less than 20 multiples. This is a stock which one can play for calendar year 2013, and we believe that 600 should be a fair value for Cummins.
You also like Suven Life Sciences. Is that the only mid-tier pharma stock that you prefer?
Well, Suven is a smaller company with 200 crores of revenues and market cap of just about 400 crores. We believe that it's not yet lived up to its potential, and why we like Suven Life Science is because it has the potential to double in the next 1 year. They are doing it's a very distinctive business model of CRAMS, drug discovery and collaborative research partnership. They have 4 fully functional collaborations with drug majors globally. And what we really like about the company is the work that they're doing in the CNS space, because the addressable market opportunity out here is close to $100 billion, and they have 11 molecules in the pipeline, and our interactions with the management seem to suggest that they have the capability to take 1 molecule every year from here on into the IND stage, and their most promising compound for Alzheimer we believe is already completed phase 1 and is on the way towards proof of concept and phase 2, and this in our view could be a game changer for Suven Life going forward, because Alzheimer is an unmet medical need. There is no cure, and very few companies actually discovering a drug for this deadly disease. Valuations, again, we are fairly comfortable at about 11 times because the entire company is spending close to 16% of its 200 crore revenue on R&D. So that's quite a lot, and the entire spending is being funded by the CRAMS business.
Ranganathan, you particularly, I mean, outside of a lot of other sectors that you probably look at by virtue of your position, your particular affinity, I believe, to pharma. Does Suven remain, we'll talk about a couple of other ideas as well that you have, but does Suven Life Science remain your top small cap pharma pick, or do you believe there are others as well which would match up, or would you rather just park all the money that you would allocate to pharma to Suven?
Not really, Neeraj, because some of the big boys like Wockhardt and Strides Arcolab, I think they still look very promising even from these levels. Why I particularly like Suven is because our view is that among the small cap pharma, Suven is probably the most undervalued at this point in time.
Okay. The other one is Dharani Sugars, and you have a buy call here. Now, you know, varied sugar stocks available. Some of the larger ones are also available at deep discount to the replacement value. Why Dharani?
Yeah, Neeraj, you know, sugar has been on a down cycle since the last 4 to 5 years, and we believe that we are beginning to see early signs of an upcycle in the sugar segment. And here, our view is that Dharani Sugars, based out of Tamil Nadu, is perhaps the best bet to play the sugar revival in the country, because it's an integrated sugar play, and being out of Tamil Nadu, they have a 20% cost advantage in terms of the cost that they pay to procure the sugar cane when compared to their peers in the north and western parts of the country. Also, Neeraj, the most important point to remember is that sugar realizations is up 4 rupees a kilo this fiscal, which is phenomenal compared to what they have been realizing over the last 2 years. And 80% of the revenues is from sugar. So this is going to be the real kicker, and we believe that this year Dharani Sugars can grow its profits at more than 200% and at least more than 50% next year. So at 2.5 times 1 year forward earnings, this is perhaps the cheapest stock trading at book value. And the important aspect to also note for investors is that they have recently commissioned a distillery in October, and the 5% mandatory ethanol blending program augurs well for the company.
Okay, Ranganathan, before we let you go, one more call that you have is in NBCC.
Yes, NBCC, National Building Corporation, it's one of the few PSUs along with Coal India where investors have made money. And we particularly like the business model of this company because it's an asset-light business model with a high asset turnover, completely debt-free with cash of about 110 rupees per share. And this is a stock we are fairly upbeat on, and we have a price target of about 225 on NBCC.